when you've got a winning trade, you have to press it until your fingers bleed. The best traders win because psychologically they're the strongest. Potentially some money is coming out of the ETFs and going into Bitcoin treasury companies. Stablecoins, when they grow, that is a great signal that there's more liquidity coming into the market. So every little bit of information that I'm able to gather adds to my ability to be able to make better decisions in trading and investing. Even the best traders in the world only have a win rate of 50 to 60%. And so it's about knowing when to press those bets. I honestly think that there's a good chance that in the next 2-3 years, at some point, oil will double and my position will probably double too. More important than long-term conviction, more important than macro, in the short term, the most important thing is All right, what is up, guys? Welcome to another episode of Money, Markets, and Mayhem. This is going to be a massive episode. We're going to get in the weeds. We've got a lot to cover, so I'm going to get right into it. Stay tuned, because very soon I'm also going to release the website, the web address, for you to sign up to the 10K challenge. So the 10K challenge is where I'm going to basically take $10,000. I'm going to put it into an account. I'm trying to open a second account at the moment so we can just have that 10,000 in there. And I'm going to trade that. And as I trade that, I'm going to email you guys updates with all the trades I'm making and a little description as to why. And it's not meant to be financial advice. You can follow along at home and do your own version of this trade. It's more so to give you a signal of the way that I'm seeing the market and where I have the most conviction or where I have the least conviction. And the aim of the trade, the goal of the challenge is going to be to try and turn that $10,000 into $100,000. We want to try and 10x it. And that the reason I want to do that is because I want to prove that anybody, even with a modest amount of money, can use trading and use the tools that we talk about in investing to build a little nest egg or to build a deposit for a home or to even change their career, right? Now, it isn't easy. It's taken me years and years and years to get to the point where I'd even dare do something like this, but what the hell? And if I fail, well, at least I'll do it on a podcast. I'll do it like live for you or I'll do it on camera for you guys. And you know, that might be even more entertaining. So let's see how that goes. I'm going to give that newsletter in just a second. I'm going to give that email address. The other things we're going to be talking about, we'll quickly touch on some of my trade updates that we've been speaking about in previous episodes. We're going to go through Bitcoin. We're going to look at where Bitcoin is at the cycle and where it might end up. And for those who watch all the way to the end today, I'm going to reveal the top 5 positions in my portfolio. So what they are and what percentage allocation I have. So the top 5 positions from a cash invested. I'm gonna share those at the end of the episode for those who stayed to the end. We're gonna look at some of my trading indicators. So I'm also gonna give you guys the software. I'm gonna give you guys the link to the software that I use that are in TradingView, which has all those green dots and all those different signals that you might not be used to. So I've been posting a couple of charts. On the weekend, I posted a Bitcoin chart. Bitcoin was about 104,000. And I said, move incoming. And then today, Bitcoin has gone up to 110,000. So I'm going to go through that chart. I'm going to show you how I was able to predict that move, or how I was able to realize that move was coming, what the setup was. And I'm going to give you a link. It's an affiliate link. So I think I get a 15% commission if you sign up. I'm going to be open and honest with that. I use the program myself, so I have a yearly subscription to this program. It's basically these scripts that go on the top of your TradingView charts. So you just log into TradingView, you set up an account with TradingView, and then you can download these scripts, and they can overlay over the top of your charts. Now, the scripts are not the be all and end all. You're going to have to learn how to use them and what they mean. There are some tutorials as part of the sign up. It's not great. Like at the end, really, I've had to learn it by doing it. I have to learn it through experience. But anyway, if that's something of interest, we'll keep that in the descriptions from now on as well. All right, first cab off the rank. So the trading challenge that we spoke about before, the email address or the website to sign up to that challenge. So to get basically, as soon as I make these trades, I'm going to send out email updates, and you'll be able to see what trades I'm putting on for what size, etc. And you'll be able to track how we're going with the $10,000. The email address or the website to sign up is markdipaola.com.au/newsletter sub. So I'll spell it for you. It's markdipaola.com.au/newsletter sub. All right. So if you sign up to that, you will be on the list, and you'll get those trade updates for the $10,000 challenge. Little update on my Tesla trade. So last week when we shared that trade, I think I was up 200 and something %. Obviously, there's been a lot of news during the week. The world's richest man and the world's most powerful man getting into a high school spat on Twitter. I can't believe it. So that trade is down. We're only up 127%. But I increased my Tesla position during the whole Elon Trump debacle. So basically, I opened up another Tesla Leaps position on the whole fiasco with Trump and Elon. I probably opened it up a little bit early. I think I opened it up when Tesla's about 295, and then it went down all the way to 275. But that's now in the green, and that was January 2026, $400 calls. And that's up 10.7% at the moment. So, there's an example of the type of trade that I'd likely be taking on the 10K challenge, because, I often like to bet against the news flow. I've found that that's probably one of the most contrarian ways to be right, is to bet against the headlines. So anyway, that's the type of trade that I would be opening in the challenge. I would take advantage of things like that, depending on whatever we had open at the time and whether it was a good time to exit that trade. So let's get into the charts. A little bit earlier, I was talking about the scripts that I use. So basically, the scripts that I use contain all these green dots, all these T's for top indicators, all these R's for reversals, and all these B for bottoms, right? And it's got these little trend support lines. So the scripts, someone has basically gone and created a script based on popular candlestick signals. And so I haven't taken the time to actually learn what exactly all these candlestick signals are. I've just been trading using the signals. Now, it's important to understand that these signals don't always turn out, right? So, for example, here, if you had have bought this bottom signal, you would have experienced a bit of a run-up, and then you would have realized that it got invalidated, and you would have lost money as a short-term trade. So what I want to be clear on is I don't use these signals for short-term entries, but they are useful to understand when there are about to be moves made. And I use it in the context of either being able to increase my position or decrease my standing positions and to trade around my long-term positions. So I don't use this to day trade because I honestly think that in the end, I don't think trading strategies work. In the end, I think they all get found out, whether it be a bot trading strategy or it be someone's special trading strategy that they're trying to tell you about. In the end, I think things happen in the market that wipes out all strategies, right? It's like the casino, right? How many times did your dad or your grandfather, I know my nonno did, used to sit at home with a pen and paper and he'd say, I've got it, Mark. I've got it. I've got the strategy that's going to make me win on roulette. Guys, eventually what happens? The house always wins. It's really the same thing when it comes to trading, right? If you're not smart enough to know when to sit out, the house always wins, because these guys, these market makers, the people out there that are making markets, that are offering the bid and the offer when there's no one else there to make a market, they're not playing to lose. They're not playing to get beaten by us. Now, if you learn enough, there are ways where you can have an edge as a retail investor, all right, with a rules-based system, having a system that controls your emotions. There's ways where you can win. But in the long run, if you're going to day trade, I don't think that's a really a great way to have much success. Even the best traders in the world only have a win rate of 50 to 60%. And so it's about knowing when to press those bets, right? The best traders win because psychologically they're the strongest. Not only do they have the trade right, they know when. There's a saying by Soros that says, when you've got a winning trade, you have to press it until your fingers bleed, right? And the best traders, the ones that make the most money, are able to master the mindset that when they have a winner, they're able to push that winner. And when they have a loser, they're able to cut their losses quick to minimize their losses. Whereas the majority of traders out there, they'll ride their losses and keep averaging in on their losses, and they'll sell their winners way too early. All right? So anyway, that with that disclaimer in mind that I wouldn't use it to day trade, you can use it to trade around your existing positions. So I'm going to throw up the images that I posted. So this is the first image that I posted on Saturday, and I said, Sailor potentially going to hit the bid on the weekend. So buy Bitcoin on the weekend because that's what he usually does. There's a move incoming. And at the time when I posted that, we were in this strong reversal candle. So we had this Shays squeeze bar. So this little, I'm explaining some of the things in the scripts. So this shade squeeze shading, this squeeze shading, basically indicates that volatility has compressed and that there's going to be a big move incoming. So there's there's three things that made me think that there was going to be a move incoming. One, Sailor usually buys Bitcoin on the weekend. Two, we had this squeeze shading. And three, we had this, so red triangle means strong bearish candle, red dot. But then we had this really strong reversal candle. And this is a really good setup when we get such a strong reversal after a strong bearish candle. It's often a signal that the market has been like, nah, I'm buying the shit out of this dip and we're going to push higher. And then today we saw this large $6,000 candle from basically this setup that we saw here. So, this might have been a time to top up, right? If you're a trader, you might have topped up in here. But what I was doing when I saw this big bearish candle, because I have a long-term macro view, I was allocating to my hodl stack during that candle. Now, it could have kept going lower and I would have kept allocating, right? It could have come down here all the way to 90,000 and I would have kept allocating. But in this instance, I was adding. As a trader, you might see this bullish reversal and you might put on a position in here, all right? And then now that we're above this track line, we're looking good. So one of the best setups for using this dot system is when you start seeing green dots above the track line, to stay in the position while there's green dots and while you're above the track line, you stay in the position. Once you lose the green dots and you break below the track line, as a trader, if you're a short-term trader, it's a very good signal to get out, to take down your risk. All right, I'm going to put my affiliate link in the description, and we'll maybe throw it up on the page as well. You'll be able to get access to that. But that's just something interesting. This is learning charts has been probably one of the best things that I've done, because it's a way to confirm or deny that your thesis is playing out. So, I'll talk more and more about charts as we go through the episodes, but I think they're extremely important. While we're on the charts, I just want to show you one quick other one. Everybody is asking, is it alt season? Is it alt season? And we've had these fake outs on the 6 hour chart. We've had these bottom signals, the green dots, and then above the track line, and then we've broken back down below the track line. Here, we've had the blue dots, the bottom signals. We've got the green dot on the 6 hour, and we're above the track line. Now let's see if we can keep breaking above the track line. So what we're looking at here is total crypto market cap, excluding the top 10. So for alt season to really kick in, we need to sustain these green dots on the daily. And as you can see, it hasn't. And then we need to hit them on the weekly, right? For alt season to truly be here. I have a theory that this cycle, we might not see an alt season like we've seen in the past. What I think has happened is too many Bitcoin treasury companies have popped up. And I think the place where the smart money is taking the risk is in the Bitcoin treasury companies, either through options or through buying those companies outright. And so I think there's a lot less money and a lot less interest in altcoins, right? I really thought meme coins was going to be massive this cycle, but ever since Trump released his coin and then released Melania, if maybe Trump had just released his Trump coin, there might have been an epic meme coin cycle. But I think what happened is when they released Melania, everybody thought, what the fuck is going on here? If these guys are going to keep releasing meme coins for Barron, for Eric, for Donald Jr., like, we're fucked. None of these other meme coins are going to do anything. And I really think that destroyed the meme coin momentum when that happened, when he released that second coin. So, look, I don't know if I could be wrong. Meme coins could make a comeback. I still got a small 2% position in Doge or a 1.5% position in Doge. That's a hodl position. I'll keep that forever because I have a feeling it might outperform Bitcoin over the long run. The most ironic, entertaining outcome is usually the most likely. But yeah, I'm not too confident on alts or meme coins in this cycle. I think there's some evidence, which I'm about to show you in a minute, that maybe ETH and some of the top 10 coins are about to overtake Bitcoin, but none of that is confirmed yet. But we'll go through that in a minute. I wanted to show you how I'm using ChatGPT to analyze charts from Glassnode. So Glassnode it's a crypto. So everything that happens on the blockchain happens on chain. So what that basically means is all transactions that happen on the blockchain are registered on the blockchain. So if you learn how to use this data, it's really, really amazing, because in the stock market, you can't see all the transactions that are happening. There's on-exchange transactions, there's off-exchange transactions, there's OTC, which is over-the-counter transactions. There's a bunch of transactions and rehypothecations and things that you can't see with the stock market. With crypto, everything that happens on-chain. You can see it all, right? It's all registered. So Glassnode basically puts out a bunch of different charts that shows the movement of things that are happening on-chain. I'm subscribed to a research service that gives me a daily crypto update. It gives me like a risk range for Bitcoin, Ethereum, Solana, and then some of the crypto miners and MSTR, CoinSpot, etc. And then what it does at the end of the report is it basically gives me 10 charts from Glassnode. And every single day, what I do is I put those charts into Glassnode, and I have Glassnode explain to me what's happening in those charts. So I'm going to go through maybe all 10 of them. We'll see how quickly we can get through them. But I'm going to go through the 10 charts of today, and I'm going to show you what it means for Bitcoin this cycle, where Bitcoin is, where it's going, and where it might go, and what prices might be achievable this cycle. So, disclaimer, all of these charts are being interpreted by ChatGPT. ChatGPT does make mistakes, as I'll show you in a little bit, a mistake that it made. I had to catch it on, but it's still better than me having a quick glance at the chart and then moving on. Having this breakdown, being able to see the explanation of what's happening in the chart in more easy to comprehend terms is just adding to my macro thesis. It's just adding to my ability to make decisions in the heat of the moment, right? So every little bit of information that I'm able to gather adds to my ability to be able to make better decisions in trading and investing. This first chart, now, if you look at it, you're like, what the hell is going on here? You've got Bitcoin price and you've got all these colored cohorts. So this is basically 10,000 plus 1,000 to 10K. What is going on? So what I did is I asked ChatGPT to explain the chart to me. And it says, chart 1, wallet cohort accumulation heat map, 15-day trend score. So this is a score based on the last 15 days activity. So dark blue is very bullish and red is bearish. So what is happening, what has been happening the last 15 days based on Bitcoin wallet size? So wallets with under 1 Bitcoin very, very bullish accumulation, right? So that's the minnows, right? That's the you would say the retail money. Between 1 and 10 Bitcoin, there's been moderate accumulation. So that's bullish. So they have been increasing, but bullish. Between 10 and 100, hesitant, mild distribution. So there's been selling between 10 and 100 Bitcoin. Why are between 10 and 100 Bitcoin selling? Well, that is roughly, if you do the math, 10 and 100 is roughly the size that the swing traders and the short-term traders would be buying Bitcoin in. And so they're distributing some of their tokens as we push up against all-time highs. 100 wallets with 100 to 1K, strong return to buying in the last 15 days. And 1,000 to 10,000 are accumulating again, and 10,000 plus have started returning, which is bullish. So that's something last time that we checked this, the 10,000 plus hadn't gotten back in, but they've started accumulating again. So maybe they're starting to believe that we're getting ready for our next leg up. And then it just gives a bit of an interpretation, color legend, etc. So retail and institutional giants are quietly buying again, while mid-size holders remain uncertain. This setup suggests stealth accumulation by smarter money, often preceding large price moves. And today we had a $6,000 candle. Here's another chart. All right. Short-term holder, long-term holder exchanges. Basically what this chart breaks down is where the holders, right? Where the holders have bought their Bitcoin. So I won't go into this one in detail, but buying Bitcoin between 0 and 30, there's a strong base. The people who bought between 90 and 108 is the vulnerable zone, right? So that's all these people who have bought recently. Those holders are vulnerable to price shocks. It's unlikely these long-term holders are going to sell on price shocks. And if they are, we would see it above in the distribution. But these people who have bought between 90 and 108, they're the most vulnerable to selling. And I know this for a fact, as I've got a lot of friends who have entered this space recently that have bought in this zone, and they're the ones that I hear from most that are worrying whether they've bought too soon, whether they should be buying more, or whether they should be selling what they're selling, what they've bought. So where you accumulate and what price is the most important thing. I want to say that one more time. More important than long-term conviction, more important than macro. In the short term, the most important thing is always price. It's always the math and the psychology around what people do based on price. It's always the most important thing in the short term, even if you have a 10-year time horizon. And above 108, right, is the clear skies potential. So if we can break above that 108, and there's another chart that basically says 114 is the range that we really need to break to get into discovery mode, then it's clear skies ahead. Then we get into this FOMO chasing setup where everyone's just dying to get in because they're scared it's going to go without them. Yeah, it gives you an interpretation of everything I've just said. So this one here is chart 3. This is money. This is Bitcoin coming off exchange versus on exchange. This one gives mixed signals, so I'll probably skip past it for now. But you're starting to see a lot of Bitcoin come off exchanges, which is probably a sign that institutionals buying it and putting it into cold storage. And so I just ask a few more questions in relation to the price action that I'd seen around that. But for the sake of time, I'm going to keep going. This one here. Okay, this one's cool. This one is Ethereum. So Ethereum ETFs, the Ethereum ETF saw their 4th straight week of inflows with 97.8K ETH added. Now, this is interesting. What is this one telling us? It's basically saying in September, this is the breakdown by trend. So in September to November, we had a slow and steady build-up. In December to March, we had profit taking, so people were exiting. In April to May, it was just flat. It was uncertain, the inflows. So this was inflows when the ETF came out. This was profit taking, so outflows of the ETF. This was uncertain. It was just like up and down. The last 4 weeks have been 4 straight weeks of net inflows. So this means people are starting to accumulate Ethereum again. All right. Now, why that's interesting is because if you look at the Bitcoin chart, the ETF flows, in the last week we had a small outflow. So we had strong institutional demand between February and April. We had the inflows slow down in May for the Bitcoin ETFs. And in June, we've started to see some outflows. Now, you might say, does that mean Bitcoin is topping? I don't necessarily think it means Bitcoin is topping. I think two things are happening. I think potentially some money is coming out of the ETFs and going into Bitcoin treasury companies. So recently I sold some of my IBIT, which is a Bitcoin ETF, and I put it into MSTR and Semler Scientific options, which are Bitcoin treasury companies. So I think there's a bit of that happening. And last 4 weeks, you've seen some rotation into ETH. So inflows have started into ETH. So you may be starting to see smart money now go further out the risk curve, start to chase treasury companies, start to chase ETH, start to chase Sol, even though I don't have this one for Sol. And you might be starting to see that rotation now from Bitcoin, which has been the most dominant, into some of these altcoins or alt strategies. All right, so that's interesting as well. Yeah, what could it mean? ETH is stepping back into the spotlight early in its reaccumulation. So there could be some good upside in ETH if you're a trader. Again, I don't have a HODL stack in ETH, but there could be some upside in ETH. With relation to ETH, I think that if I was going to take a gamble on ETH, I'd probably rather take a gamble on ETH through NFTs. And I won't go into detail in this episode, but some of the OG Ethereum NFTs like CryptoPunks or Beeple or Xcopy, some of the OG Ethereum NFTs, I would be more likely to buy some OG Ethereum NFTs than buy Ethereum, because if you look at the floor prices for those NFTs, they usually outperform Ethereum by 3 to 8 times, right? So if you were going to punt on Ethereum, the easiest way is just doing it through exchange, whatever, or the ETFs. But if you're doing some HODL, some long-term HODL, I'd potentially be looking at some NFTs. I'll go into more, I'll potentially, if you're interested, comment, and I'll potentially go into more detail about that in future episodes. Okay, these two I love. These two charts are amazing. So this is stablecoin aggregate supplies. So in the red line, you're seeing the top 5 stablecoins grow from November 23 to 120 billion. It's there's $100 billion worth of stable coins that has come into the market since November 2023. The black line is Bitcoin, and stable coins, when they grow, that is a great signal that there's more liquidity coming into the market, which can drive the price of Bitcoin up. If you see here, stable coins from March 2020 coincided with Bitcoin rising, and then Bitcoin hit its top here and started to fall. Stablecoins were probably hitting alts from this period, and then they started to come out of the market. So this is, you can see, when this starts to roll over, when stablecoins rolls over, it's time to kind of get out, because money and liquidity is coming out of crypto. So I love this chart. I'll show you the second one. This is BTC versus USDT, and you can see that USDT, or Tether, is even more closely aligned to the Bitcoin price. So as USDT leads Bitcoin, so more liquidity comes into the market, it leads Bitcoin. Bitcoin has those parabolic runs. So you're seeing, look at all this stable coin supply coming into the market recently since Trump got elected to now, all this supply. And what, if you're going to see a blow off, you're probably going to see Bitcoin run above the supply. Once that happens, once that crosses over or gets close to crossing over, then you might be reaching a top. So what this tells me is there's still room for Bitcoin to run, and that the most important thing to the Bitcoin price is the supply of USDT. It's the amount of people that are changing fiat for USDT. And you can look into USDT. I asked ChatGPT to do a deep research look into it, and it's amazing to see that the connections that it has with the US government at the moment. And I don't think a business like USDT could have survived without the backdoor blessing of the US government. So, CIA, military, something is out there making sure that USDT survives. I was even wondering, do they have mafia connections because the founders are Italian and the CEO is Italian? Couldn't find anything on that. But yeah, USDT is a very interesting one. Don't believe the FUD when it comes to USDT. I think that's largely been let go. But this is you can see that stablecoin supply is at all-time highs. Historically, every major bull market, BTC, has been preceded or accompanied by a stablecoin expansion. So these two charts are actually the charts that make me most confident that 110,000, 111,000 will not be the top for this cycle, that we still have room to run, right? And you're obviously seeing USDC Circle, who's just gone public. Their inflows is starting to return as well. Remember, USDC lost its peg during the Silicon Valley Bank debacle in March 2023 because Pocahontas, Elizabeth Warren, was trying to kill all of those cryptocurrency and stablecoin companies with Operation Choke Point. And so a lot of people left USDC, got out of it, and now they're all coming back in because it's been legitimized. It's gone onto the stock exchange, it's gone IPO, and it doubled in its first couple of days. All right, I'm going to show you one more chart. So this is the Bitcoin price since the price halving. So these are all the previous cycles. And as you can see, the earliest cycles are in orange, and then every cycle, the blow off is less and less, right? So the upside is less and less. This is where people are saying we could be at a top. I don't think so, based on what I just ran through with you. But I asked ChatGPT to tell me what do you full interpretation and prediction of probable outcomes with percentage likelihood on each. And it gave me this summary of what's happened in each Bitcoin run. And so we had a 2000x in the first run, a 5000x from the bottom in the second one, a 120x in the third, a 25x in the fourth, and it's saying so far we've had a 3.5x. I said, well, what do you think we might get? And it said 3 scenarios, and it gave probabilities. Now, it made a mistake with one of the scenarios. The third scenario, it said Bitcoin topped at 74K in Q1 2024, but it topped at 110K. So you got to watch this and pull it up. And I basically said, can you correct scenario 3? I've said, have you made any other mistakes? Can you have another look? Any mistakes to the other 2 predictions? Because I wanted it to have a look. And then it basically came up with its final prediction. Now, take this with a grain of salt. Please take this with a grain of salt. This could be way off. But it basically said scenario 2 is that we get to somewhere between 150 and 220, and it gives it a 55 to 60% probability. Just keep in mind, ChatGPT isn't using feelings to come up with these numbers. It's using an algorithm and it's using math in the background. I don't understand exactly what it is. I could probably ask it, what's the math that you used if you really wanted to go deep? But I'm just using this as a rough guide, right? As just one more leg to the stool of trying to work out where's my exit points going to be, etc. I'll also analyze the charts. I'll analyze macro. I'll analyze stablecoins. I'll analyze everything. This is just one more fun little thing, right? Third scenario is we get like a big super cycle blow off, 300,000 to 500,000. It gives it a 15 to 20% probability. And the second scenario was that 111 was the top. And, we retraced back to 65 to 95. So there you have it, guys. Just a couple of ways that you can start to use data. You can start to use charts. Like if you're not using ChatGPT for everything that you do in macro trading, you're not doing it right. Like this is augmenting our brains. It's augmenting our abilities. Instead of having 5 or 6 analysts, we now can become the analysts. And I can't wait. I've got a funny feeling. Here's my prediction. Like the iPhone changed the world in 2008, I think that a new device is about to be launched, or it's in the process of being designed, that is going to be a device without a screen that you talk to. And it's going to be an AI device that basically listens to you and uploads all your health metrics, all your metrics, everything that happens. It basically, on a 24-hour period, it just keeps gathering data about you. And then it keeps building and building and building and helping you to kind of have your viewpoints on the world and expand. One of the setbacks on ChatGPT at the moment is that it has a good memory, but it's a little bit shady at times. Recently, OpenAI bought a company from Johnny Ive, a company called IO, for $6.5 billion, hasn't started releasing products. For those who know the Apple story, Johnny Ive was the guy that helped Steve Jobs create the iPhone. He is responsible for the user experience and the product design of the iPhone, and now he's working with OpenAI to create some sort of device potentially that is like our AI companion that stays with us 24/7. When that comes, I cannot wait, because that's going to make us all superhuman. And I believe that device is going to be responsible for creating the first billion-dollar one-employee company. So, you guys, you got to stay abreast of all this. If you're doing macro and you're not talking about AI, you're not doing macro right. If you're doing AI and you're not talking about macro, you're not doing AI right, because it's all intertwined. Everything that's happening at the moment is so intertwined. And I think I touched on that briefly in the last episode. All right, so we've gone for a little while already. I'm going to wrap this one up now, but I'm going to finish now with my top 5 positions for what they are, for what it's worth. This is not financial advice. I just want to explain to you how I'm positioned risk-wise. My portfolio, so the portfolio that I trade with or that I hodl with, or anything that I've got invested in stocks, bonds, or trading accounts, is about 30% of my net wealth. I want to increase that to 40 to 50% of my net wealth, because this is my profession. But just as, I know it's great to provide context when macro people who are talking about trading, because no one ever reveals this stuff, and it's like, okay, yeah, he's doing this and he's doing that, but like, how much of his net wealth is he trading with? Like 10%, 100%? Well, I'm letting you guys know that I'm trading, my portfolio is about 30% of my net wealth, right? So take that as you will in terms of risk metrics. My top 5 positions at the moment in terms of cash in that position, and they are all different positions, so I'll explain each position, which is spot, which are options, etc. My top position is Woodside Energy. It's an Australian company. It's the number 1 oil and gas company in Australia. It's about a 22% position. I'm in that for 3 reasons. First reason is I think the AUD is going to outperform the USD, so I want to have some currency back here in AUD because I get that upside arbitrage. It offers an 8% dividend yield, so I'm happy to collect that rather than have my money sit in an offset account. And oil, I think, is at pretty historic lows, and I think it's pretty close to a bottom. And not financial advice. None of this is financial advice. You got to make your own decisions. I'm just sharing some of my positions for entertainment purposes. I'm a hack on the internet. I've lost $1 million in 2 days before, so you take it as you will. But I honestly think that there's a good chance that in the next 2-3 years, at some point, oil will double. And my position will probably double too. So it's kind of like better than a bank account, better than an offset. My second largest position is Bitcoin. It's about 18.88. Oh, I love those numbers. 18.88% of my my trading portfolio, and that's my hodl stack. I'll never sell that. My third largest position is STRK. So it's a preferred bond. It's a preferred. It's a MSTR preferred. I'm not going to go into detail on STRK. I have had ChatGPT create essays for me that explain Bitcoin treasury companies and explain a little bit about STRK. So maybe in future I'll talk a little bit about those. But that also offers an 8% coupon. It's in USD, and it can go up over time. So if it appreciates over time, the coupon will come down. But there's a convertible preferred. So if MSTR goes over $1,000, I can convert my STRK at 10-1. So 10 shares of STRK I can convert to MSTR at 1 share if it goes over $1,000. So it's convertible preferred. So I've got upside potential, appreciation potential, and I'm getting an 8% yield on that as well. My fourth largest position is an options position. So this is only 14% of my portfolio, but it's much more risky, much more leveraged. It's long dated call options on MSTR between January and June. and it's 14% of my portfolio. And my fifth largest position is Tesla, and it's 8.4% of my portfolio. And there's basically 3 tranches of call options, 2 of them which I spoke to you guys about a little bit earlier in the pod. So there you go. Those who tuned in to the end, you basically get to see the top 5 positions and where I'm putting the majority of my money and my conviction at the moment. But a little hint, MSTR being call options, at the moment that is placed or positioned for the largest short-term upside. So that's it, guys. That's another episode. This one was much more meaty. I'd be interested to see how this one performs versus last week's one where we kind of went through the story of debt and debasement and nothing stops this train. I wonder if these meaty ones will be more loved or less loved. I just want to say last week's episode is over 3,000 views and it's on its way to becoming the most watched episode. So if you missed that one, please tune in and check that out, because I think that's fundamental. That macro view is fundamental to being able to trade and invest in macro markets effectively. That's it for today, guys. Thanks, and I will see you next week, and hopefully we'll have the trading challenge started, but we're getting close now. Bye for now.